yesterday we covered the income statement and we covered the balance sheet, and today we look at the cash flow statement. Now this is what we have done already, group activity, key cash flow statement. Now friends, when I talk about the cash flow statement, let me mention this to you. Across the globe, balance sheet is important. P&L is also important. But more than the balance sheet and P&L, what is important is the cash flow. And why is the cash flow important? Because ultimately, if you have a good handle on the cash flow of the business, you can virtually have a good handle on the entire business. And that is the reason why we have to understand what is the cash flow statement. So cash and profit, what is the difference? Will somebody like to tell me? How do you differentiate between the cash and profit?
Cash is like blood.
Cash is like?
Blood of the company.
Blood of the company, of course, very good. So cash is like blood of the company. So please remember the difference between the cash and the profit. Profit is on paper.
Yes.
And cash is the reality.
Hand. Reality, it is in hand.
It is in hand. So profit is only on paper, and cash is the reality. Cash is something which is available on your hand, and that is the major difference between the profit and cash. Both of these, friends, of course, are interlinked, but cash is something which is available immediately. Cash is something which is available immediately. And let me tell you, friends, so how to differentiate between the cash and the profit. In my business, I have earned a profit of 100 million euros. In my business, I have earned a profit of 100 million euros. Is this profit of 100 million euros, is it my lifeline? Is it my oxygen? Is it my blood? Need to find out. Will this profit of 100 million euros give me a long life? Need to find out. And when I find out, what do I come to know? When I find out, I come to know that this 100 million, I have earned a profit of 100 million euros for sure. But my inventory has gone up by 50 million euros and my receivables have gone up by 70 million euros. Now please tell me, will this profit of 100 million euros that I have earned in a situation like this, will it give me long life? And the answer is no.
No.
And why the answer is no? Because I have earned a profit of 100 million euros for sure, but my inventory is up by 50 million euros, receivables are up by 70 million euros. That means I am out as far as the cash is concerned by 20 million euros. And if I am out by cash by 20 million euros, then I will not have a long life. I will not have a long life. Then is cash. Then what is the lifeline? The lifeline is cash. And why the lifeline is cash? Because if I earned a profit of 100 million euros and my inventory and my receivables are at the same level, that means this profit of 100 million euros is available in my hand. And when it is available in my hand, I can make use of it. And that is the difference between the profit and the cash. Cash is something which is on your hand. Profit is something which is only in your P&L statement. How to calculate the operating cash flow? All of us obviously need to understand as to how to calculate the operating cash flow. And this is how we will calculate the operating cash flow. So we start with the current operating income. And you know what is your COI. So your current operating income is what we start with. And to the figure of current operating income, we add the depreciation and we add the amortization. And I'm sure today all of us know the difference between the depreciation and amortization as we discussed yesterday. We also add the figure of provisions to this current operating income. Will somebody like to tell me as to why are we adding the figure of provisions to the figure of current operating income to arrive at our operating cash flow? Anyone?
Because these are not real expenses.
Okay, so these are real expenses. The only thing,
real expenses, but no outflow cash.
Absolutely, perfect. So provisions are real expenses based on estimates, and there is a no cash flow for the moment on account of the provisions. The cash flow outflow is going to happen in future. But while arriving at my current operating income, I'm sure you will remember the first slide, the very first slide, that is revenue from sales, revenue from the sale of the products and the services minus cost of sales. The cost of sales, you would remember, also included depreciation and provision. So provision we have deducted from the revenues for arriving at the figure of current operating income, but that amount of provision in the year when we are doing the accounting has not got out. So that means that cash is still available at the end of the year with us. It is going to be spent in future, so then we will look at differently. But for the moment, we add the provisions back, because provision, please remember, is also a non-cash expense. That means in the year when we make the provision, there is no outflow of cash on account of expenses for which we make a provision. And then of course we minus the income tax, because income tax of course is the amount that we will need to pay to the government. So we will also minus the income tax. So that is going to be my operating cash flow. That means from my operations, this is the amount of cash flow that I am getting. So current operating income, COI minus depreciation and amortization minus provision, minus the plus provision plus depreciation and amortization minus income tax, because that money I will have to pay to the government. So what is going to be available in my hand from the operations? That is my operating cash flow. We can also look at this equation, friends, and understand from the point of view of current free operating cash flow. So what we have calculated here, and please remember, what we have calculated here is the operating cash flow. That means from my operations, how much cash I am getting in my hand, that is my operating cash flow. Please pay attention once again. What is operating cash flow? Operating cash flow is from my operations, how much is the amount of cash that I am getting in my hand, that is my operating cash flow. Please remember, operating cash flow is not your free cash flow. Operating cash flow is not your free cash flow. Why operating cash flow is not your free cash flow? Because from this operating cash flow that you have, you would have spent money on capexes, you would have spent money on increase in the working capital. So the amount that you have spent on the capex has gone out. The amount that you have spent on increasing your working capital has gone out. So therefore, what is going to be available in your hand is not the operating cash flow that you see on the screen. What is going to be available in your hand, really speaking, is the amount which is operating free cash flow minus the amount spent on the capex minus the amount spent on increase in the working capital, and that is the amount which is going to be available in your hand, and that amount is referred as current free operating cash flow. That means this is the amount which is available in my hand, which I can spend freely. I cannot spend my current free cash flow freely, because current free cash flow, let's say for example, if my current free cash flow is 1000 euros, if my current cash flow is 1000 euros, so this 1000 euros, can I spend freely? I will need to check. And when I check, what do I find out? I find out that 200 euros have been spent on capex, 100 euros have been spent on increase in the working capital. So that means 300 euros have already been consumed out of the 1000. So now really speaking, what is available in my hand is not 1000. What is available in my hand is 1000 euros minus 200 euros minus 100 euros, and that is 700 euros. And this 700 euros which is available, friends, in my hand is known as current free operating cash flow. That means this 700 euros is available in my hand, and I can use it freely for whatever purpose that I want to use it for. And that is your current free operating cash flow. So in case if there is any question on this, please go ahead, and I'll take your question first and then go to the next slide.